Okay, folks, welcome to Sunday Night Stock Charts Live. This is Bob Desmond, and for those who aren't familiar with me, I am the owner founder of the Contrarian Trader, and our link is below if you want some guidance through the trading world. And would love to have you. If you're not ready yet, that's fine. Like, subscribe, you know the deal. All right, so what we're going to talk about. Hope everybody had an awesome weekend. What we're going to talk about tonight is obviously the war over in the Middle East. I want to begin by saying this: I'm a Catholic Christian. I do not go to church every day, but that doesn't mean I do not feel empathy for everyone. So, for all those that are dying, I put this together tonight, thinking about Israel and how it relates to the financial markets. I can't get out of my mind all the atrocities that are going on and that will go on both sides. So life is too precious, and all too often we take it for granted. And I feel bad for everybody that's caught up, just as I feel bad for those in the Ukraine. All right. That being said, I don't want to be a Debbie Downer. We're going to go over a lot tonight, mostly about Israel, the impact on the markets. We're going to talk about last week's price action. Where do I think the markets are going? So let's get to it. Let me share my screen. Let's talk about the opening futures action because it's not looking pretty, but I want to put a context on it. We're going to put it into context, what we're about to see, and it's no great shock that we are down on the session so far. Percentage-wise on the ES minis, we are down over a half percentage point, and we're probably going to go lower. But again, I promise context. What's the context? We need to go into the new trading week remembering that we left a day on Friday at very, very overbought levels on an intraday basis. So it's expected that we were going to get a pullback anyway on Monday. Now, I had hoped on certain equities. This is before the Israeli news broke. My dad called me. I was at the gym on Saturday morning, and he called me and he let me know. And when I'm at the gym, I brainstorm for the new trading week. I'm like, if they gap certain stocks up, Meta up on Monday, I'm probably going to short them and at least scalp a position off the table, not stay long to the short side. However, after that phone call, I was thinking, okay, reprogram, reset. This is going to make a difference coming into Monday morning. There probably will not be a gap up. I don't expect the recovery by tomorrow morning here. I suspect that we're going to open down on the session. We're going to talk about the drivers of that in a moment and whether or not I believe it's going to last. So at current, we are down on the E-minis. Let's let this settle out for a moment. Let's take a moment. Let's let people settle in, step in here. I'm still seeing the numbers rise up. Let's say hello to folks. Wow, a lot of comments. Look at Jody right out of the gate, number one. Your alert fired off tonight, huh? Good for you. Hey, Jody. Early here, no doubt. Everybody loves Jody. Hey, Paul. Paul, the positives on Tesla's Cybertruck. I saw the picture of the new Cybertruck. Did not look good. Outweighed the drop in deliveries and price cuts. Okay, I saw the picture of the Cybertruck versus the what do you call it? The concept car. I'm not a big fan of the Tesla look, to be honest with you. Not even the concept car, but I think it's pretty fugly, to be honest with you. But that's just me. I'm not going to knock Tesla. I like Elon Musk quite a bit, so I'm not going to knock Tesla. I'm looking forward to. Well, let me pause here. I don't want to get into cement. I get your point. I understand your point, Paul. What you're making here. Didn't mean to take it off into a different tangent. I get you. Seymour Rivers. I'm looking forward to this episode. Thank you very much, Seymour. You didn't give me a sound check, Seymour. I'm seeing a lot of good charts now. Good. How's my sound check? I rely upon Seymour quite a bit. He's my unofficial producer. Pete, Welcome, Mr. Pete. Franklin, do you think Israel being attacked by Iran-linked terrorists being an issue with the market? Yes, I do. Yeah. We'll talk about how that ties in a moment, but yes, I am. Hey, Denny, welcome. There we go. There we go. Thanks. Thanks, Seymour. NVIDIA continues on a daily basis to look like short term. Yeah, NVIDIA is looking good. I agree. As a matter of fact, let's go over NVIDIA later on because I believe there is a squeeze setting up on NVIDIA. So we'll take a look at that one. And when I say a squeeze, I mean a TTM squeeze to the upside. Gold will rally on war news. Yes. Hey, Larry. Then sell off and leave us holding the bag. Yeah, you're probably going to get a rally. I haven't looked yet. My guess is gold is going to be up. The dollar is going to be up. That correlation is highly unusual, and it only happens rarely on a geopolitical event. And yes, correct. It does not last. Mike, hello. Jody, I think is it important to show not to miss tonight's because of the events? And we're going to cover them. Thank you for that. Big ES dump at the open. Yes. Talon. How is that brisket, brother? Baptized Catholic Church. All right. There we go. You understand. TF Hatter, welcome. Trader Isaac. Hello, Bob. When our leaders are going to be concerned about, worry about the U.S., they're not going to. This is, I have a theory here of what's going on. Yeah, I don't disagree. I have a theory of what they're doing now. Hey, Jeff. Jody's so popular. Mike, good audio here. Thank you, sir. Appreciate it, Mike. All right, let's get to it. All right, so we are into the second 5-minute candle here. It appears as though we have settled out a little bit. Not horrible, but I do believe that we are probably going to go lower. And not because simply about Iran, or excuse me, Israel. I think it has to do with just a bit overbought. That's simply it on an intraday basis. Let's take a look at the NQs. These are the NASDAQ 100. They're gapping down about a 0.5 percentage point. They've recovered some of their losses. So you're already seeing bids come in here. Let's check out the rut. Wow, the rut is getting annihilated. Annihilated. We've given, look at this. ES minis just made new lower lows. Wow. The Russell small caps have given back about, I'd say, 60% of their Friday gains from the lows. And in fact, from where here's Friday's open. Where is it? Here's Friday's. We're now down below Friday's opening price action on the rut. Wow. And there is no bounce here. I need to take a look at yields. I wouldn't imagine yields would be up right now. I would imagine bonds would be rallying. But you never know. Why is my system lagging tonight? Yeah, bonds are rallying, yields are down, so that makes sense. I'm not exactly sure why the small caps are getting hammered so much. What am I missing here? Let's go back to the VIX is ripping up higher right now. Yeah, okay. So, all right, so now it's consistent. All right, so the ES minis, they have broken down to new lower lows, significantly lower lows where we were before. Let's check back in with the NQ. I don't think those fired off an alert. Maybe they did simultaneously. Yeah, they did. Let's clear this junk off. Oh no, they didn't fire off. It didn't fire off. Still holding support. So these are the mega caps, right? So these are your Microsofts, your Googles, and whatnot, Apple. So they're again holding up the market. Could you imagine where the E-minis would be right now if these broke down? They would be down with the rut. I need a coffee tonight. Usually I'm drinking water, which I do have. Let's check in with Vol. Let's go to a 15-minute view. Now, this is the volatility index where we saw a peak on Friday on that morning sell-off. But again, the VIX was annihilated on Friday morning, late afternoon. To see a counter trend move here is not a shock intraday. So we need to again. I want context, not hyperbole, not hyperbole, hyperbolic rhetoric about war and this and that. That's not why we're here. We're here to be rational, logical, and to walk through this with the outcome being that we put a buck in our pocket. We get some Applebee's money. Let's take a look at energy prices. We got to take a look at crude first. And this could be a problem. Now, it could be a short problem. For all we know, by tomorrow, oil is going to make a new weekly lower low. We're going to talk about the whys. What are the mechanics behind that in a moment? Because this is all going to unfold very, very quickly. So within the next several hours, we're going to know whether or not this becomes a bigger, wider, broader war than isolated to simply the Gaza Strip and Israel. But as it stands right now, we have light Texas Intermediate crude up 3%. Let's check in with Brent, which we normally don't do, but I think it's worth a look. NASDAQ just made a new session lower low. The NASDAQ 100 to be specific. Let's check out the, my phone is firing off here. So we have Brent up over 2.5%. Let's check out the NASDAQ comp. Where is it? What's the symbol for the comp Q? Comp. Forget it. I forget what the future symbol is. I rarely use it. I usually just go with the NQ. Let's check out currencies. Dollar first. My guess is the dollar is up. And it is. All right, so here's the reality is that we have oil up. My guess is the Bloomberg Commodity Index is going to be up as well. Is it even open? No, this is not even open yet. My guess is that it'll be open when it opens up, it will pop up higher. Let's check in with the Japanese yen, which broke out last week, folks. We've been talking about that. Japanese yen is up as well. That means the euro must be down. For the dollar to be up and the Japanese yen to be up, euro's got to be down. And it is by about a third of a percentage point. Let's check in with gold. Spot gold up over a percentage point, along with the US dollar. Again, don't get lured into a false sense of security that there's a new normal here where the dollar is up and gold is up. That is not the new normal. These are fleeting, very, very fleeting. So be careful. A correlation between gold and the US dollar. I've seen it before. It happens from time to time. It usually correlates with an event. Could be geopolitical, could be economic. My guess is, I don't know this for a fact, I'd have to go back, March of 23, they were probably trading it last, correlated for a brief period of time. Before that, geopolitical events. Silver. Silver up about a percentage point. What else do you want to take a look at? Home heating oil. God damn. I got to get my checkbook out. Time to fill up. God damn. All right, let's go to commodities. I'm happy to say, we got to go to a weekly chart for this. I'm happy to say that last week, and I finally remembered the symbol. I'm going to impress those who really care about my ability to finally remember live cattle, LE. And we finally, what did it close up or is it this week? Oh, yeah, it closed up. How dare they? Reversed last week. God darn it. I thought it would close out weak. Reversed. There goes my New York strip. All right, let's go to agriculture. Ag. Soybeans. Annihilated last week. Moving lower. Deflationary. Wheat. Up. Oh, this is a 30-minute view. Sorry. Up on the week. Let's go back to soybeans. Still not a good week, but this is unsustainable. I think we may pop soon on soybeans. Let's go to corn. Corn had a good week. So corn broke out last week. All right, let's check back in real quickly with the equity markets. Primarily, we'll take a look at the E-minis. All right, so we're forming a resistance level here at around 4309. Now, right around here, let's move this lower. Right around here at 4260, and especially down here at around 4250, that is like the holy grail of support levels down in that range, down to around 4200. There's going to be a battle if we do roll over. I'm not of that mind yet, given Friday's price action and the weekly price action last week, that's exactly what's going to happen. You may be saying, wait a minute, what happened to you? You were all bearish lately. Well, things change. You know, we had a bullish reversal bar. They annihilated the stock market on Friday morning, and they reversed it and they ripped it up higher. You know, who am I to argue? So we live with the market that we have, not the one that we want. So as it stands right now, it is evident that the war over in the Middle East is impacting the equity markets, but there's a broader way of looking at this rather than just simply through the lens of Hamas, Israel. Let's get to it. We'll go to that in a moment. Okay, let's talk a little bit about first economic data coming out this week. I can't believe it's the 9th of October. Sober October, feeling really good. Did a 3-day fast last week. I succeeded in doing it. I was hangry. I was not happy. I did not have a moment of clarity like I was promised by the gurus on YouTube. I'm not very happy. I'm gonna unsubscribe from a couple of those channels. But the next morning, I did the proper thing coming off that fast. I just ate a little bit of fruit, ate some dates, something light. Woke up the next morning. Did I have a skip in my step? Went to the gym, great workout. So I would do it again. And this stuff here for electrolytes, this came in the last day of the fast. LMNT, good stuff. Very, very, I'm not a sponsor. I don't get any money. Good stuff, all natural stuff, and no sugar, no nothing like that. And it was really good. Kept the energy up. So good stuff, tastes good. A little bit kind of sweet for me, and the artificial stuff they had in there, like stevia, but I think that's natural. But I just put a lot of water in. Good stuff. I fill up the whole thing. One little envelope. Flavored the whole goddamn thing. Really good. All right, we move on. Economic data coming out on Monday. We have Fed heads coming out. Unless they screw things up and say something stupid, nothing should be to worry about. NFIB optimism index. That is the that's the survey of small businesses that can sometimes move the market. I don't think it's going to this time around. On Wednesday, we get the PPI. That is the producer price index. That is the level of inflation at the producer level. We also get the core PPI at the same time. We're going to get year over year on both. Then at 2:00, we're going to get the minutes of the Federal Reserve's last meeting. For whatever reason, that moves the markets. I never understand it, to be honest with you. I think that the gatekeepers over at CNBC, they prep their words for the algorithms to trip off and fire the market one direction or the other, and they probably get a kickback for it. I don't know that to be the truth, but a lot of money is getting made with these big bursts up higher and lower. Somebody's got to getting a little bit of a kickback. You would imagine if they're not, they're stupid. So on Thursday, we're going to get CPI. Very, very important, especially at the core. On Friday, import prices, it's not going to mean all that much. Nobody really pays attention to it. It's PPI, CPI minutes this week. The minutes are going to be a trading thing. I wouldn't worry all too much about that. Right now, the markets have priced in no rate hike for November and December. With this Israeli event taking place right now, if it continues and it hits the markets, you can forget any possibility of a rate hike for the remainder of the year. Let's go to comments. Wow, you guys are on fire tonight. Hey, Jeff. Thank you, sir. Okay. Yes, accurate. Well, you have Lockheed Martin as a crude play. Oh, you're saying for the meaning defense, Raytheon, Boeing. Yeah. I get where you're going. Yep. Yeah. It shouldn't be a shock. The question is, does it hold? Buster Stacks. Hey, Buster Stacks. 10-year yield move, and the yield must be causing all kinds of chaos beneath the surface. No doubt about it. Watch the banks this week. Paul, hello. We can go over copper. TF Hatter, copper. I think you're meaning the futures. Sean, can you go over Zim? And yeah, I was looking at the margins on LVMH. It's amazing. They got crazy margins over there. No wonder why he's one of the most richest guys in the world. TZ Burton, welcome. Google recently, currently news quoted Monopoly Warfare will be watching though for an upside day. You mean for breakups and things like that? Mike, AMD, like the after hours bulls. AMD's setting up nicely, very, very nicely. It's one of my top picks going into the new trading week. AMD's looking really, really good. NVIDIA, AMD, Meta really looks astounding. Left a day overbought on Friday. Expect a pullback. We're going to probably sell some puts on Meta. Is Rivian dead money now after offering? It should be. I think it's one of the ugliest cars out there. I'm sorry if somebody's got a Rivian out there. I don't understand the design. Those headlamps that drive me crazy. It's like I don't know. It looks. I don't get it. I don't get it. I'm sorry. Give me a muscle car. Give me anything else except for a Rivian. From the side, it looks like any other car out there. Is LVMH over the counter expensive to trade? I don't think it's over the counter. It shouldn't be. Is it expensive to trade? I don't even know the share price. I've never traded it, to be honest with you. I was just reading it on Twitter about on Twitter, there's something about the top companies with a moat, meaning the most insulation to higher yields and the economy. Microsoft is one of them. Several others that are out there that you would know of. LVMH was on that list. I'm trying to remember all the tickers that reacted from Russia's invasion of Ukraine. Some went stupid high. Yeah. Okay. Earnings coming out this week, folks. It begins on Tuesday. PepsiCo, that stock has been beaten up really, really bad. Delta, and I may play that one. If they keep this stock beaten up, I think the RSI on PepsiCo is below 20. If it's below 20 and they report earnings, I may trade PepsiCo, selling a put spread on PepsiCo. Thursday, Delta comes out. Domino's. On Friday is when it really begins, let's face it. JP Morgan Chase comes out. Citigroup comes out. Did you know that Citigroup owns most of the New York Federal Reserve? They have the largest position in the New York Fed. JP Morgan is second to Citi. PNC comes out, BlackRock, Wells Fargo, and UNH comes out. So it begins. And you can look at the next week after that, that we have more big banks coming out the following week. Watch out for Schwab. There have been a lot of rumors about Schwab. It's not good, and I have an account with them. And watch out for their earnings report. Normally I don't, but I do now. Bank of America the following week. Goldman Sachs, a lot of big banks coming out. Then, of course, the pimp Mac Daddy of them all, Tesla, Netflix. Those two are going to be a wild Wednesday. They usually are, especially Netflix with its 3 standard deviation moves that burn me twice. So I don't want to get ahead of myself. Earnings start this week. I can't believe it's already here. So what are the analysts expecting out of earnings? Well, let's first, before we do that, let's take a look at where we're at on the Shiller PE ratio. Despite all the volatility in the marketplace, despite all the oversold conditions on the S&P 500, not the triple Qs, but the S&P 500, we're still at 29.45, nearly a 30 rear view mirror PE on the S&P 500. The however is, and I was listening to Tom Lee, who I happen to like. Tom Lee was out on one day last week. The stock market was getting hammered, and they interviewed him. And the guy's he's unflappable. He's unflappable. And stock market's getting hammered. And here's a guy who's just very calm. He's always calm. And he's like, I think we're going to get double-digit rally here from, this is where he talks, from here probably to the end of the year, quite possibly new all-time highs. And son of a gun, a Friday afternoon, still calm. Not, you gotta like the guy. He wasn't gloating, nothing like that. He was still saying 11% expectation for year-end rally. So the only issue I take with it, because he was expecting multiple expansion, that is certainly not what the market is expecting. This is at a fact set, and the expectation is for earnings growth for Q3 2023 to be negative. Negative. So for Tom to be right, they need to have some forward-looking guidance that is like mind-blowingly good. So we'll see if that happens. But earnings growth is not looking good going into this earnings report with a Schiller PE ratio near 30, where the mean is at 17. All right, so let's get to it. Let's talk about Israel, Hamas, Iran, possibly Lebanon, Hezbollah, and the potential for a wider war. Now, what we need to do is take a look at everything in context. What is the context here? Well, we could say that February of 22 was the milestone. That's the event that started the events that are unfolding right now from happening, meaning the invasion by Russia into Ukraine. But that's not true. It's not true. NATO has been expanding, breaking every accord that we had with the Russians after the Berlin Wall fell. They're pulled back from Eastern Europe. They were promised that we would not expand beyond where we were at that point in time. What do? Up to their doorstep. Their line in the sand was the Ukraine. I'm not an apologist for Russia. I'm just saying I understand it. We didn't like it in 1963 when they tried to put missiles into Cuba. Hell, we almost had World War III. Yet they're supposed to expect troops, missiles, biolabs, which they captured in the Ukraine on their border. NATO on their border. It's insane. It's unconscionable. So that's really when it began, back in 2014, around there. Even back, you want to go back to 1990, fine, go for it. But 2014 is when it really ramped up, the Orange Revolution, blah, 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 blah. So then you had, after that, you had us pounding the Chinese over Taiwan for right or for wrong. I'm not a big fan of the Chinese Communist Party. And now we are in a position where we are lacking funding now for the Ukraine. It's quite possible if they do not get that funding that this comes to an end really quick. The EU over the weekend said, hey, listen, if the United States does not come to the table with more money, we're not going to do it. That's what will of steel the EU has. If the United States doesn't pony up, if we, the people, do not pony up, they're not going to pony up. Well, it makes sense. I wouldn't either. I wouldn't have ponied up in the first place. I would have told Boris Yeltsin to go scratch himself by telling the Ukrainians, don't sign a peace deal before the war ever began or days into the war. But we didn't do it. We stopped the peace. So here we're at. Peace needs to be struck. But where will the next war come from? It's got to be another war. That's the scary part. That's the real scary part here. Does it expand? Does it now go into Iran? Do the Israelis go into the Iranian territory and start bombing those nuclear reactors after this? Because where did Hamas get their weapons from? Hamas has been saying it. Thank you, Iran. Thank you. And we'll go into where else they got their weapons from in a moment. Off of Wall Street Silver, report U.S. weapons from Afghanistan ended up with Palestinian groups operating in the Gaza Strip. Who would have thought it? We left $30 billion worth of equipment over there willingly. We decided, we made this conscious decision due to saving money, to leave that equipment there to be sold into the black market. That equipment is now being used against the Israelis. Unconscionable. And all of this is self-inflicted. Nobody came to us and said, we're going to do this to you. Nobody. It's us. We do it to ourselves. Now, does this become a wider operation? I don't, for whatever reason, Biden, Obama, they pay the Iranians. I don't know why. They want to pay the Iranians. They like to pay them for whatever reasons, pallets of cash. Not so much Trump, not so much, more conservative presidents. But if we have to, if we need a new war, why not? They'll make it Iran. I don't think that they want to do that. But if we give the green light, and trust me, if the Israelis attack Iran, they're not going to do that without the green light from the United States, because that's a war that they are going to need vastly more forces, especially air forces and sea forces, to be able to support any extended war. Iran it looks close on the map, but it's not close. So if Israel, and this is why all this may die down really, really quick, if Israel does not attack Iran within the next couple of days, I don't think that anything happens here. I think that everything settles out. The United States, American people, the investment community in particular, forgets really, really quick. And we go about our business as if this never happened. That's just the way it is. Could be 700 dead, could be 1,000 dead, could be 20,000 dead. It's just the way it goes. So can this be something? Is there something behind or a reason to be concerned about this in terms of your investment dollar? Yeah. Do I think ultimately that it pans out to be an impact on your investment dollar? No. But it could be wrong. Now, if it does, we need to take a step back and we need to take a look about, what happened the last time this happened. Before we talk about this, the one thing that gets me really, really, conspiracy theorists, and not for nothing, conspiracy theories nowadays have a habit of coming true way too often. So you have Yom Kippur, 50-year anniversary. You would think that the IDL, the Israeli Defense League or Force, IDF, Israeli Defense Force, would have been on double secret alert for any type of attack, small. They weren't. Completely caught off guard. How is that possible? How is that possible? You have an enemy that hates you so close, and on the 50th anniversary of the Yom Kippur War, you're asleep at the switch, literally asleep at the switch. They attack you by air, sea, tunnel. How does that happen? Let's go back 50 years. What happened 50 years ago to the price of oil? Where's my chart of oil? Son of a gun. Oh, here it is. I am out of sequence here. My apologies. I got to fire my producer. Not Seymour Rivers, my producer. He's my unofficial producer. My internal producer who needs an upgrade. All right. So, I'm sorry. It's not 50 years, 60 years. Exactly 60 years ago, the Yom Kippur War. No, it's not right. That's not right. 1973 is not 60 years ago. I'm sorry. That's not 60 years ago. Exactly 60 years ago, that's wrong. The Yom Kippur War, it's 50 years. The Yom Kippur War, October 6th to October 25th started. In the next 7 years, crude went from $5 to $50. Interest rates went to 6.5 to 18. Gold went from 42 22 to 875. Now, we need to really put this into context, okay? Yeah, oil did surge and it stayed high for a very, very long time. But let's not forget that the United States was a net importer of primarily OPEC oil. Let's face it. We are nowhere near as reliant upon OPEC as what we once were. We're going to elaborate on that in a moment. Interest rates. Interest rates are going up higher because of guns and butter. We wanted social welfare out of Lyndon Baines Johnson, arguably before Biden and Obama, was the worst president in history, far worse than Jimmy Carter. Lyndon Baines Johnson, somebody that nobody ever talks about. Guns and butter and all that deficit spending caused the U.S. to go off of the gold standard and caused the dollar to drop, yields to move up higher, inflation to move up higher, which also boosted up oil prices, which were denominated in U.S. dollars because it was the petrodollar. So let's put everything into context. While I appreciate this guy's graph here, we do not look at things through a hyperbolic lens. We want to rationalize. Now, the only thing that I'm going to say that is quite concerning, I don't know if we had a petroleum reserve back then. To be honest with you, I don't know. I don't know when that began. Could have began afterwards. But the Strategic Petroleum Reserve, which our esteemed, venerable President of the United States decided to empty in case it's supposed to be in case there's an emergency. He emptied it because prices of oil went up high and we're going into a presidential year. I digress. We now have 17 days left of oil left in the Strategic Petroleum Reserve. So where we should be able to right now say, okay, it's a shock to the system. We have the SPR out there if we need it. That'll get us through the next couple of months. This will all be gone in a couple of months. Don't worry about it. Well, that would have been great a year ago, 2 years ago. Now we have 17 days left. And we have Biden that canceled the leases on federal lands for new oil drilling. Let's expand upon this for a moment about where the hopes and dream of the globalists lie.
Now, the final thing I want to address quickly is just the lie that solar and wind can rapidly replace fossil fuels. If this were true, they wouldn't need massive government preferences of their own, and they wouldn't need massive government punishments of fossil fuels. And if solar and wind could actually replace fossil fuels, China, which dominates the production of solar and wind components, wouldn't be using coal to produce these components, and they wouldn't have 300 planned new coal plants, more than all we have in the United States right now, to last over 40 years. So if you're thinking we're going to have more security with this stuff, we're not going to have much energy, and it's all going to be dependent on China. Now, the final thing I want to address quickly is just...
So who's the beneficiary of everything nowadays? Why does it seem that China is the winner pretty much on everything? We left Afghanistan. Who got Bagram Air Force Base? The Chinese got it. Who got all the mineral rights over in Afghanistan? The Chinese got it. Does anybody see that there's not something very, very wrong here? Look at our cities, the fentanyl that's coming through, supplied by, you guessed it, the Chinese. Let's talk about the markets. So going into the new trading week, I had expected a break in the markets. And I still expect a break in the markets. We're going to go over why in a moment. But you know, years of doing this, and it took me a while because I have a big ego. You got to be self-aware. You have to be self-aware. And I mentioned this to members over the weekend that, you know, while I have a big ego and I don't want to be wrong, that you need to be self-aware and understand that it's okay to be wrong, but you need to be able to acknowledge it and act accordingly. Act accordingly. If you're positioned in the wrong direction, exit stage right. Now, luckily, we were able to make money on our short of the triple Qs. The Tesla, I let that run a little bit too long because of the price cuts, and I had to exit that. I took a loss on that. So we didn't take a haircut last week. But what bothered me going into the weekend was that I missed something, and that was I was looking at the market in the context of the triple Qs, which is why I was trying to find the symbol earlier for the Nasdaq Composite, which I found yesterday, but it fell off my list. Uh, Looking at the broader market, so I had expected that the Qs would play catch up with the S&P 500 to the downside, but what I missed was the advanced decline line on the S&P 500 was at extreme levels. Put call ratio was at nosebleed levels. I should have caught that. And that probably, I didn't go all in short, which is thank God I didn't do that, but I should have. And I'll be changing the week ahead not the week ahead commentary. Well, the week ahead commentary market wrap to look more closely at advanced decline line and the put call ratio. So that way I have a pulse check more on the underlying health of the market. Each of those were implying that we're unsustainable. Now, that being said, the pressure valve has been taken off. So anything goes now. But absent the Israeli event over the weekend, I would have to say going into the new trading week, and I still believe going into the new trading week that we will probably finish the week up, even with the Israeli event. Because my guess is that this is not going to become a broader event unless Israel strikes Iran or Israel goes into Lebanon. That is a widening of the war. As long as it is Israel and the Gaza Strip, this is a nothing burger in terms of it's horrible in terms of, I hate saying that. I got to read. It's horrible in terms of life, the loss of life, suffering, injury. I have to say that. But in terms of finance, which is why we're here, it means nothing in the grand scheme of things. This has been going on for decades now, on and on and on. So in the grand scheme of things, it doesn't mean much unless it broadens out. So looking at the NASDAQ composite going into the new trading week, we had a bullish key reversal bar. If you're not currently a subscriber or you're new to trading, you want to know what the hell I'm talking about, bullish reversal bars, bullish engulfings, that's candlestick terminology. I have a 5-part video tutorial below, my top 5 favorite candlestick patterns. Take a look. It's free. And it looks as though we're probably going to move up higher here. That being said, we do have momentum, which is still waning. Stokes trading down below 50. Rallies tend to fade. However, we are becoming oversold. Now, when I say oversold on a weekly basis, when we take a look at an intraday chart of the NASDAQ, we left this is a gamma event. This is a rip your face off rally. The minute that this thing went positive on the day, we were out of our short of the Qs. We're out. So we can reshort this market right now at a far better price than where we got out on Friday. I'm not going to do that. I may do it for a scalp, but not for an overnight trade. I think that what you're seeing here in the futures action on the markets is what you should expect to see going into tomorrow. Might you have seen a green, absent Israel, green futures, but a fade in the morning? Yeah, could have happened. But by and large, we should have expected a down day or at least a down morning on Monday, given the overbought condition that we're in. So no great shock. Now, when I talk about alleviating the pressure valve on these markets, the advanced decline line on the NASDAQ, advances versus decliners, was at a level where, it could go lower. It could go lower, but when you're at these levels, you don't want to go pressing you short. You don't want to do that. So by the end of business on Friday, we had broken back out above trend. So the pressure valve, this indicator, which a lot of technicians use to identify unsustainable downtrends, uptrends, it's back to neutral. So this is not a go-to anymore. I haven't taken a look at the put-call ratio. My guess is the put-call ratio has come back in line as well. So anything could happen here, but my guess is we are still in October. It's still a toss-up. Could be a lot of volatility one way or the other. Well, one thing we need to keep in mind is that going into November, that is a seasonally favorable. It's the best month of the year. So seasonally favorable time of year. So we should expect a rally, and that'll give us the opportunity to set up again, get long, enjoy the rally, but set up again for when we see the opportunity to, suppose we have advancers that are an advanced decline that is unsustainable, and it's time to go short. Or a put call ratio that's implying that you have way too many calls getting bought versus puts. There's way too much optimism. Therefore, you want to go short. That's the exact opposite of what we saw last week. So we may have that opportunity going into the back half of the year. So if you're not currently a member, 14-day free trial offer. Now, what was the impetus, the catalyst for the rally on Friday? Headlines all across the board. U.S. labor market strength continues. September non-farm payrolls soar to 336,000, far exceeding estimates. Bravo. What was that fired up? The VIX just broke out. That took out Friday's high. If that's the alert that fired off. Wow. The VIX just took out Friday's high. Think about that. I'm looking to see if there's any new news out there. I'm not seeing it. They usually have a banner up here with new news. And to be honest, I would have expected that the S&P 500, wow, we just shot up higher again. I would have expected that the S&P 500 would have broken to new lower lows. But it hasn't. Okay. So back to non-farm payrolls. The headlines drove the sell-off in the market in the morning, but you always need to look underneath the hood. And under the hood was not a pretty picture. First of all, the household survey came nowhere near as before Biden. The household survey and the establishment survey were like this. They would go up together. They would go down together, tick for tick. Ever since Biden came into office, the establishment survey, appropriately named, household survey, this way in terms of jobs. So U.S. Labor market strength continues. September non-farm payroll soared to 336,000, blah, 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 blah. Here's the reality. All headlines about the jobs report highlight how the U.S. added 336,000 jobs in September. But what they don't highlight is the drop in full-time employment. The drop in full-time employment over the last 3 months. Over the last 3 months, full-time employment in the United States is down 692,000 jobs. The last 3 times this happened over the past 25 years was 2020, 2008, and 2001. You know what happened back then? Dot-com crisis, 2020, 2008 financial crisis, 2001. That was still the dot-com bubble. Oh, I'm sorry. That was 9/11. Meanwhile, part-time employment jumped by nearly 1.2 million since June. Full-time employment is falling at levels last seen in recessions, while part-time employment is soaring. Are people taking multiple jobs to fight inflation? Yes. The answer is yes. They are double counting jobs. They are double counting part-time jobs as full-time. And the revisions to the prior jobs numbers were revised down. Here's the measure of part-time jobs that have risen 1.2 million. Here are the full-time jobs. And this is out of the Bureau of Labor and Statistics. Go to their website, bls.gov. This is why the market turned around on Friday. And the reason why the dollar dropped, along with yields. Why is everything so slow tonight? This is me. I'm live. Hey. One of my charts is gone. Sorry. I lost one of my charts. God damn it. All right, let's move on. Why are we? All right, so I kind of lost track here because my segue was gone. So why are we still? This is not going to end well. This is not going to end well. The incompetence, the Israelis, the fact that they were asleep at the switch. I'm at a time in my life where I've seen a lot of things now, and most recently, the most horrible things that I've seen, unconscionable things, are lately. And whether it be with the vaccines, whether it be with COVID, you got to wonder: was this a false flag event? Was this intentional? Them falling asleep at the switch, and you have these corrupt politicians that are in office, but the puppet masters behind them that are pure evil. And we have a $2 trillion per year deficit going on here, 33 trillion in debt. And for the first time in history, this chart is becoming increasingly more relevant as investors realize that treasuries are no longer the safest alternative. Central banks have already recognized this trend and are in the process of enhancing the quality of their international reserves by accumulating hard assets like gold. What this is U.S. treasuries now more this is the volatility index of treasuries relative to gold. Gold is now less volatile than U.S. treasuries. First time in a year. First time ever. Ever. And when did it begin? 2022. What did the U.S. government do in 2022? They weaponized the SWIFT system, the dollar payment SWIFT system. They weaponized the U.S. dollar. They froze the assets, seized the assets, international assets of the Russians. Who would want to keep their foreign assets in a hostile environment like that? We did it to ourselves. I said it live back then. It was not going to end well. It is not going to end well. So, for all the rally that took place last week, what did the yield curve do? It went up. It steepened. While the markets may like bad news, they perceive that bad news is good news. That jobs report was horrible. It was horrible. The headline was great, but in reality, it was horrible. And the yield curve is reflecting it. The yield curve is steepening. Now, we can continue to rally here with the yield curve steepening, but once it goes positive, once we cross that zero line, that's when historically things get real fast in the stock market, 30-year view monthly chart. Here's where we're at current. Once we pass the Rubicon here in this gray area, this is traditionally where the equity markets highlighted, S&P 500 overlaid in gray, they begin to roll over. So this steepening, which may get, don't worry about it, flagged away by CNBC. We don't flag it away. This is a reality. This is a train wreck, a slow moving train wreck, which is picking up speed. Look at the rate of change last week alone. Look at this rate of change. This is a moonshot in 1 week. We are at the highs on the yield curve not seen since October of 22. What does that mean? We are now beyond the high of March of this year when you have the regional bank crisis jamming the yield curve up higher. Now, the dollar last week may just well provide a little bit of help to the stock market. It will not provide help to the U.S. consumer. Why? If it continues to drop. Why? Well, if we're buying commodities denominated in U.S. dollars, what is that? That is in and of itself inflationary. Your dollar is buying less product because the price of that product goes up when the dollar goes down. So again, bad news is good news for the stock market. And this is the relationship between the S&P 500. I love this. I watched it a couple of times, and this goes back to the 1990s. So watch it through. And remember, when you get to 2000, when you get to 2007, when you get to 2020, pay attention to those three time frames and pay attention to the S&P 500, and you'll understand that I just don't pull this out of my hat. This is history. Let me pause here. In black is the S&P 500. Orange is the yield curve. My apologies. So here, inversion, steepening, S&P 500 corrects. That's 2000. Inversion, Get ready. We're coming into 2019 now. Inversion, steepening, and there's the crash. And here we are yet again. Let's do some chart requests. What time do we have? As a matter of fact, let's go to comments. Slowness. What slow? Something? Is there a lag? Wow, there's so many. You guys are on fire tonight. Holy cow! I got so many comments to go through. Yes, Jody, accurate. Americans got screwed with massive price inflation, fuel costs. Yep. TF Hatter, yes, crude is running. Talent, I love Jewish people. Shabbat Shalom. On board with that. I can tell you that Jewish people don't love America. Let's not do that. Let's not do that. We don't paint with a broad brush here. I don't want to do it to Muslims. I don't want to do it to anybody. I don't paint with a broad brush. Joey bribes Biden. DKNG, let's take a look at that one. That's like a king of the discretionary names. The West admitted it doesn't have any more weapons. Yes, we're low on. We did it to ourselves. How can this not be intentional? I'm trying to go. If I'm not going over your comment, I can't go over all of them. You guys are on fire, man. I can't go over all of them. I just don't have the time. Sean, I got burnt by owning 80 yards of gas. Oh, I had the Russian ETF. Don't worry about it. Luckily, I sold a call, or I bought a call spread. So I had puts. I mean, I had a call side on as well that I sold. It offset the loss. It was small. Franklin, have a great night, my friend. Wow, we are over here. We're way over. Holy cow, we're way over. Yeah, bad sector. Roku, we'll go over that. All right, really quick, we're going to run through these. I got to shut it off there. All right. Folks, we're going to be using TrendSpider, 35% discount code below. Take advantage of it. Automated technical analysis. Let's go to Roku. Roku's holding weekly support. It's right at resistance. I would wait for a close above 72.05, 72.25. As a matter of fact, I would wait for a close above this mark here to get aggressive. I would nibble on a breakout above 72.25. On a close above 74.55, I'd be a buyer. Talent. Yeah, thank you. Please, thanks for the reminder. Like, subscribe. You know the deal. Thank you, guys. Leave a comment. If you're watching this on the replay, you're welcome, Jody. Daily View. Daily View. Again, we're right at resistance. We have a higher low here. RSI. Higher lows. We broke out on Friday. Look for a retest. You get a retest down to $70. If all this blows over, the geopolitical stuff is off the headlines, look for a retest down at $70 a share. I would nibble there, and then I would wait for 72.25, buy a little bit more, and then add on that weekly breakout above, what was that again? 74.55. DKNG. Really nice week last week. We recaptured the support level. Watch for a retest of it at around 29.60. Let's call it 65. $29.65. Decent volume. It's loving support down at $27.75. Daily view. Beautiful breakout. I'd be a buyer of DraftKings on a retest. Touch, bounce. I don't want that much sensitivity. Just a little bit. There we go. DraftKings, bullish. You're welcome, Jody. Have a great week. Profitable trading week to everyone that's cutting out. TZ Barton, you're welcome. Have a profitable trading week yourself, my friend. LVMH. Bullish key reversal bar last week. And it broke out. I would be a buyer. Let's go to a daily chart first. I like this support shelf here. Wow, this is expensive stock. Wow. On a dollar basis, $778. Daily view. We broke out last week. Good price action. You're going to have resistance above here, but good price action. It's beginning to firm up nicely. And this has got, it's a great business. I couldn't believe the numbers I was looking on in LVMH. So not that expensive. A multiple lower than the S&P 500, and they just print cash. Margins 65%. Zim, weekly view. Continue to press lows, but we do have support below here, which I believe we bounced off of. Yes, we did, to the penny, $9.11. 5 consecutive down weeks. Friday's price action, an outside reversal bar, and a higher low. I like Zim here. I'd be a buyer with a stop loss right below this support level at around $9 per share on a closing basis. And I would not be a buyer of stocks in a pullback tomorrow morning. Unless, of course, they closed out the day on Friday with real serious bullish price action, and they're stacked above their 20 period, 50-day period, and 30 period moving averages. If they're stacked positively, that means it's a strong stock behaving well through this sell-off. I'd be okay with buying the pullback. But if you're going to buy spec stocks like this on a pullback, I'd stay small, wait for the rebound, add on that rebound. Rivian. Yeah, this is getting clubbed. I would not be a buyer here. I think this goes lower. Double top, and we broke down to new lower lows. This isn't a new confirmation breakdown. I would avoid. It's quite possibly a short. NVIDIA. NVIDIA, I happen to love. I don't know whether or not this was on my TTM squeeze. It may have been. Let me check that out. This is one of my favorite squeezes. Scans, squeezes. You have a lot of names that are ready to pop here. No, it's not on the squeeze list. ISRG is, Garmin is, JP Morgan is, Walmart is, Costco is. Now, when they squeeze, it could be one direction or the other. So it doesn't necessarily mean it goes up. It could go down as well. You need to take a look at the stacking of your moving averages. But NVIDIA, I think, breaks out here into earnings, which is not this month. I believe it's the following month. Thank you, Ray. Appreciate that. Thanks for being here. Appreciate it. Sean, thank you very much, Sean. Have a great night, my friend. See you tomorrow. Okay. So I see folks putting in symbols. If you're, I don't have the time to do anymore, so I apologize if I can't get to you. I'm running way over here. NVIDIA, I did LVMH, Zim, I did them all. All right. Oh, you know what? Copper. I promised to do copper. We're going to leave it off with copper. Before we do that, VIX is consolidating. Copper. I haven't looked at copper in a while, so I'm curious. I don't know. Here it is. GC. Copper actually broke a wedge formation. This is a weekly chart. So Dr. Copper is not looking good here. In fact, this is a squeeze that is going in the negative direction. It's broken down. I think copper goes lower. I would avoid this like the plague unless you're going to short it. Talon, take care, brother. I'll talk to you tomorrow. Be well. Oh, good for you. Good for you. Enjoy, man. Enjoy. All right, folks, have a profitable trading week. Thanks for being here and have a outstanding, healthy week. And let's hope that this crisis over in the Middle East ends well for the people. We have enough death and suffering in this world. So God bless. Have a great night. Talk to you soon. Be well. You're welcome, TF Howard. I'll talk to you. Much respect to you too, my friend. Thank you.